Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for July 10th, 2010. Okay, let's go into a daily view of SPY. We had a pretty tremendous week this week, a pretty tremendous bullish week, I should say. Very nice up days. Now, we had three straight up days in a row, and for me, that usually means short term overbought. Anytime when the market moves three or more days in a particular direction, that indicates short term either overbought or oversold. And since the market moved up, that would be overbought. We did manage to close this gap right here that was produced a couple of weeks ago or even last week. So that's a pretty significant closure of a resistance level. And not to mention that it also moved above this 20-day moving average. So the main thing now is will it be able to get above this 50-day, just like how the 50-day more or less stalled prices right here. Overall, I do see some kind of channeling going on, a possible channeling going on. If you were to connect the upper and lower points of this chart here, you can see how the market is just bouncing around in this channel. So if we do have some more upside, I would look for the 50-day first, and then possibly up to this upper part of this channel. So maybe around this 110 area could be a possible upside target. But for now, it seems like the market, as I mentioned, is a bit short-term overbought. I wouldn't be surprised if we get a little bit of pullback and then another push higher, kind of like a zigzag movement up. And usually zigzag movements are corrective in nature. One of the characteristics of a bear market rally is that you experience rallies on low volume, especially when you have a huge update like this. And when you look back into the market and you look at when the market goes up, it doesn't usually produce like 3%, 4% gains. So that's also a characteristic of a short covering of bear market rallies. But that doesn't mean that bear market rallies can't spark a longer term rally into the next resistance level. Okay, so always be mindful of that. Okay, let me jump into the VIX real fast. The VIX I see so far is more or less range bound between this level and this level. If the VIX drops back to this level, then I'll be a bit cautious going long because it's going back to a prior support level. And if we get a bounce in the VIX, that usually translates to bearishness in the market. Overall, watch how sentiment is. If it breaks below this, then there's probably more bullishness or rally to come. But if it stops around here, and as I mentioned, bounces higher, then that means the relief rally could be over. Okay, let me jump into gold real fast. I got a request to do a quick analysis on gold. Looking on the weekly view of GLD, you can see how gold has always pulled back to this 20-week moving average, and it's basically done so again here this week. And not to mention, we also came back to a prior resistance, now turned support level around the 115 area. So this is a critical spot for gold because it now needs to bounce higher. If it breaks down, then we know that this 20-week moving average is no longer support, and that means we can probably get a deeper pullback on gold, which is down to this 50-week moving average. So that's something that I'll be watching for. Now, especially onto a daily view where we got a breakage of this support level, we might even get a decent rally to touch this line, and then it pulls back even further into a deeper correction. So who knows? If it's able to get above this line, then sure, I'll still remain bullish on gold. But if it touches here and it stalls and it turns around, then that means there's a bigger correction to come for gold.